Okay, and I will disable the waiting room.
Okay.
And I'm just going to make sure that it's streaming on the other platform because we have it streaming on Facebook as well. Yep, I can see it. Wonderful. And I'm just going to share. Oops, copy link. Okay, cool. All right. Welcome, everyone. Yes, I see we are live. Okay, great. All right. So, welcome everyone. HEJ.tax. We do these live streams every week, at least once a week. We talk all things tax. And today we have the honor and the privilege of a frequent guest on our platform, Mr. Carlos Morales. And we're going to talk about Mexico tax for expats in general, and I guess US expats in particular. Now, please keep in mind that while this will be a discussion where we touch on the topical issues, this isn't meant to be advice. So don't expect that, whatever we say, you're gonna have a how-to or a how-to list, and you walk away and you're gonna do exactly what we say, right? Doesn't work like that. There's no way we can know your situation inside out in the few minutes that we have here today. So what we're hoping, what the key thing we want you to have from this exchange is an awareness of the key issues that you need to keep in mind as you engage your own preferred advisors. So as you seek advice, these are the key issues to think about. So once again, this is not advice. We're having a general conversation about general principles. You can consider it education, or if you like, you can even consider it entertainment. It's up to you. This is being recorded. It will be made available on multiple platforms. It's being live streamed simultaneously. I know most of you are here on Zoom. It's also being live streamed on Facebook, LinkedIn, and Twitter, and on YouTube. And once the recording is done, the recording will be made available on 25 other platforms, which includes Spotify, iTunes, SoundCloud, basically wherever you get your preferred podcasts, you'll be able to find this. So if any of your friends or colleagues weren't able to make it today, just let them know that it'll be available. And without further ado, I turn you on to Carlos. So basically the format is as follows. We will Carlos will go through some key developments in the Mexican tax front. And if you have questions, we receive questions in advance. We receive like about 10 or so questions in advance. If you email them to us, we have it. Thank you for sending it. If you didn't get a chance to ask your question, or if more questions pop into your head as you're watching this, feel free to type in the box below and we'll get to it in the order in which we received it. So thank you. Remember, this is being recorded. So if you do not want your image to be reflected on the recording, all you need to do is keep your camera switched off. So, all right, Carlos, over to you, sir.
Thank you very much, Darren. It's a pleasure to be here with you and with all people which are interested in these topics. As we know, we start a new year in 4 months ago with a lot of different tax reforms, and we have chosen for today 3 main topics, and also you can ask other that you need to know, of course, but because we have received a lot of questions during these first months, I have chosen here three main topics, which are digital platforms, second, a new tax regime which is called trust tax regime, and the third one is real estate. So we're going to be going through each one of them, and at the end or in your questions you can post whatever other that are relevant for you. So starting with this, we have to mention something that we discussed in the previous webinar, which is tax residence. Tax residence is a term included in the Mexican income tax law or in the treaty between Mexico and the US, or Mexico and whatever other country. In terms of that residence, we can be into a situation of Mexican residence or foreign, or in this case, US tax resident. And it's very important to consider where is the source of income. For instance, let's say that a US tax resident has a permanent establishment in Mexico. Then that person should pay in Mexico. Other situation, if the income source is direct from Mexico, they should pay in Mexico. And also, as a US tax resident, if you have income source worldwide, also Mexico would claim to tax the income abroad. And the main idea of this is to define whether should be paid the tax, and only in one country. We have many situations in which one person could be considered as US resident and Mexican tax resident. And to avoid double taxation, we have the treaty, and we can use it conveniently.
Can I suggest a quick question on this slide? You mentioned permanent establishment for the benefit of those who may be unfamiliar with the term. Could you briefly comment on what it means, please?
Yes, permanent establishment is a term referred to carry out business in Mexico. For instance, if you have in Mexico, let's say, let's say a warehouse where you just promote or have marketing activities, then we don't have a permanent establishment from which derives the obligation to pay taxes in Mexico. But if you have an office, and in that office you are closing agreements of sales or rendering services from that, then you have a permanent establishment, which is not a corporation or whatever. It is only a place of business, and many times it comes from a representative of the foreign company that is carrying out business in Mexico.
So that's a key point, and I'm glad you raised it, because so many of the inquiries that we get would be from, for example, Americans who may run a business online. They may have a single member LLC, or maybe they have a partnership, but they are a key decision maker and they are tax resident in Mexico. So as a result of that, the business will have potentially permanent establishment. So their business, even though they have a bank account maybe in the US, even though the structure maybe an LLC in the US or a lease company or whatever, the corporation may have a taxable presence in Mexico because of this concept of permanent establishment. So that's really key. I'm glad you raised it. Sorry, back to you.
Yes, and that's very important, because maybe that company is paying their taxes in the country where it was set up, and the Mexican authorities would ask to pay taxes once again in Mexico. So in terms of that, it's very convenient to analyze how you're working, because many times it's convenient to have a subsidiary, a Mexican corporation in Mexico, to have clear everything and to avoid double taxation or inconvenience. Okay, so let's go through another situation. What is my tax residence? Okay, we're talking about individuals, and in terms of the Mexican tax law and the treaty, there are differences. Let's say that the treaty states that if you have a permanent home in Mexico, then you are considered Mexican for tax purposes. Also, if your personal and economic relationships are stated here in Mexico, also, and if you are national, or if you have your habitual residence in Mexico, there are situations that would be considered you as a tax resident in Mexico. In the other hand, the Mexican income tax law also consider a permanent home in Mexico. Also, if you have more than 50% of your income coming from Mexico, or if your professional center is in this country. As well as if you are national, then also you are considered as tax resident in Mexico. So it's very important to look at each one of the situations, because maybe you are Mexican in the Mexican income tax law, but you can be not Mexican under the treaty. So you can choose from which legislation be considered, to have clear everything, to choose where you will be paying your taxes.
So here we kind of pointing towards the tiebreaker provisions in the treaty, where someone, they may be a U.S. expat in Mexico. So to some extent, one can argue that their center of economic interests or vital interests may be in Mexico. They may have a home there, but if there may be an opportunity, once they consult with a professional, of course, you don't want to jump to any conclusions on your own. There may be an opportunity to invoke the tiebreaker and find oneself fully taxable in one jurisdiction and excluded from the other. Is that a fair assessment?
Yes, that's a very good
Mm,
advice, because
mm,
you can be considered as Mexican tax resident in terms of our legislation. And if you have everything, if you have your analysis very strong, which states that in terms of the treaty of your country, you are not considered as Mexican, then you could be safe, you could be out of the situation of double taxation. So before starting a business, before changing your home to Mexico, is very important. And I have a lot of questions about that. I mean, we go through every aspect of your personal relationship, your work, everything, just to have very strong all the elements to be safe, paying in just one country.
fantastic. Thank you for that.
Okay, so this is the general situation that we have to take into account, and now we can go through these three topics that we are going to explain now. And the first one is digital platforms. As you know, with this pandemic, there's a lot of business which is run in electronic devices. We have, through the social media, a lot of marketing, and we know that we see on our phones that you can buy merchandise. You have classes, courses, exercises, retreats, everything. We have a new world in electronic devices, and uh, that is seen in this case by the Mexican tax authorities as a source of income. So we have new tax reforms this year recalling that situation, because we have many times individuals who are doing business with their, let's say, with their web pages, with the platforms, with third-party platforms, and also they're running advertising. And there is a topic here very important in the world, which is the influencers, which are talking about products and they are not paying taxes in their country where people are consuming or where everything is the transaction is made. So we start this year with this new tax regime, which recalls where is located the source of income. If the source of income is in Mexico, then taxes should be paid there. Normally, they are paid by the one which carry out the transaction, which is selling the product or giving classes or whatever. But as there are foreign people involved, there are rules that are derives the obligation to withhold the Mexican income tax. Let's say as we have people don't be a Mexican tax resident, they recall to have a representative in Mexico to have a little bit of that tax paid in Mexico. And also, it's very important to consider that all transactions are made now in a financial system with credit cards, with transfers. So it's very, very easy to track transactions. So we start this year with this surprise, and we have to be very aware of what are the implications.
Sorry, a quick question on that.
Yeah.
So, uh, and we have a lot of clients who are influencers, who are YouTubers. So, if someone is an influencer and they may be based in Mexico, so therefore they're Mexico tax resident, are we saying, just for clarity, right,
Mm.
that the income that they derive online from selling courses, from sponsorship deals, or whether it's ad revenue, that's all taxable to Mexico as well?
Yes, in this case, if
Hmm.
the influencer is Mexican tax resident with the rules we
Hmm.
have already talked, then
Hmm.
without regarding that this person didn't issue an invoice, or maybe they didn't have agreed an agreement or whatever,
Hmm.
if they receive money coming from the advertising they do
Hmm. Hmm.
regularly,
Hmm.
in that case, they have to pay taxes in Mexico.
Okay, got it. So because they're Mexican tax resident, they're taxable on their worldwide income anyway. What if
Yes.
someone was in another jurisdiction
Yeah.
and they had an audience in Mexico? So they're not in Mexico, they're not Mexico tax resident,
Okay.
but their audience is in Mexico, and there may be sponsorship deals or whatever. So there's income being derived from Mexico, even though they're physically not there. Uh, would that still be taxable potentially?
Well, that's the new reform.
Hmm.
If you like, we can go through what to know what is the which is considered as taxable in Mexico.
Right.
And in that case,
Sure.
we have to focus very well in where is the client. So, for
Right.
instance, if this influencer
Hmm.
sells something and is having let's say a percentage of the sales of that product, and the client purchased is a tax resident in Mexico,
Hmm.
uh, then we have to look at 4 points. The first one is if this client has a domicile, an address in Mexico. That's the first one. Second situation is if this person paid through a Mexican financial institution, credit card, debit card, or whatever. A third one is where is the IP address of the computer where they bought the product. And fourth is the phone code. If it's 52, then it's Mexico, and it's considered that the client is Mexican and is taxable the income that this person is obtaining.
Fantastic. So again, it's worth it. if there are any influencers who may be watching this or listening to this, it may be worth getting advice just to make sure you're on the right side of the tax rules. Thanks for that, Carlos. Yeah.
Yes, that's very important. And well, we are going to see now another situation, because let's say this influencer should be paying taxes in Mexico as a tax resident, for instance. No? But also we have, um, uh, let's say, platforms which comes between the buyer and the seller, for instance. Or let's say that an American resident buy an apartment in Mexico and rent it through Airbnb. So Airbnb comes between the owner and the client. So we have rules for these platforms, and we have three ways to do the business. The first one are those platforms which are foreign platforms, and they are registered in Mexico. For instance, Airbnb is registered in Mexico. And also, let's say Harvard is registered in Mexico. There are a lot of companies, but not all are registered. This is a process that started on January, and we're on the way to have them. There's all kind of platforms which are not registered, and they have no the same benefits than the registered ones. And the other way to do business is directly. Let's say a person which is renting their apartment to a person here in Mexico without having anyone in between. So in the first case, with a registered platform, we have the obligation of this platform to withhold a 4% withholding income tax. And we have a VAT, value added tax, with a 8 to 16% withholding. Okay. If we have not registered the platform, there is a 25% withholding of income tax and 16% of value added tax. And if the business is directly, it's more complicated, because if we assume that we have a big company like Airbnb, they come to Mexico, they have representatives, they have a Mexican tax ID, they file their taxes each month, they don't have problems. But what happens if an American owner rent his property to a client? Then if the client is Mexican, then from the rent they should withhold to the American 25%. So it's very complicated, because we have these transactions for a weekend, and we do not have many times invoices. There are people in another countries. It's very complicated. It's really complicated, and this scheme is made to ensure that everything is regulated. Okay, so they put these intermediaries, these platforms in between to have taxes in Mexico. Okay, that's the first topic. The second one, if you have any other questions, we can go through this other topic. This is a new tax regime that started in January, which is called a trust tax regime. A trust tax regime is for those people that are rendering professional services or business profits in Mexico. It's for individuals or also for corporations, but they have important savings in the tax rate. Let's talk that before this year, an individual, depending on the income that they have, they will be paying from 3% to 35%. With this tax regime, they will be paying 1.1% or 2.5 maximum. So it's a very important saving. For instance, this new regime is for individuals who have an annual income of $190,000. That's the maximum amount that you could have. If you have less than that amount, then you will be eligible to pay taxes on that. So for instance, let's have this example. If a person with $190,000 of gross income in 1 year, they will be paying like $5,000 in a year, only that. And in the previous tax regime, they will be paying like $55,000. It's a very important tax regime. It's very useful for those that are doing the comparison between the US tax and the Mexican tax. If they have the opportunity to choose where to pay their taxes, many times they, of course, they see how much will be paying in Mexico. There's a lot of money, so they decide to keep being a US tax resident. But with this option, they can be saving a lot of money. We have just to be aware that we have the limit of income, $190,000 for individuals, and for corporations, we have not a saving in tax rate, but there are other benefits, and this regime is for a net income of $1,750,000 a year. It could be claimed for everyone starting business in Mexico as a tax resident in this year. It's based on cash flow, and it's very important to have everything paid on time, to have an excellent tax behavior, because if you don't comply, they change, the authorities can change you to the previous tax regime, and you have to pay the difference you saved. So doing the things right is the best way to go through this opportunity, and it will be very important, very useful option for many people. Okay, the third topic we are going through is coming from a lot of questions that I have all the time from people that live in the US. They have their investment in real estate properties in Mexico. They come to live here, or maybe they have to have their vacations here, or rent the rest of the year. It's a very common way of having their patrimony in Mexico, and there is a very important situation to consider here, is that when someone is selling the property in the future, then they as foreign residents, they should pay the 25% of the whole price of the transaction. That's the first option. And the second option is to have a representative in Mexico And instead of paying 25% over the whole price, then they will pay 35% but of the gain. Let's say the price less the cost of purchase of this real estate. They will have this benefit. And in terms of an example, we have here an example. We have a sales price of 3.5 million and acquisition cost of 3 million. We have capital gain of 500,000. And in the first scenario, the 25% of the sales price of 3.5 million is $875,000. And if we take the option with a representative in Mexico, you will be paying 35% over 500,000, which is 175,000. We're saving there 700,000. It's convenient. So it is very important to consider in the long term, because when you are renting a property, you will be subject to pay taxes because the property is in Mexico. But in the long run, when you want to recall the investment and you have the opportunity to sell the property, we have this option.
Fantastic, thank you. And that reminds me of the regime in the US as well, where if foreigner is disposing of real estate in the US, you can have withholding on the gross selling price, 15%, or there's an option to pay the proper marginal tax rate. So it mirrors that.
Right, it's the same thing here. You have to have a representative in Mexico, which has a tax ID in Mexico. Okay, so and this tax treatment is on both on the Mexican tax law and the treaty, so it is the same. Okay, so in general, these are the three topics that we choose to be talking today about. And if you want, we can go through the questions on all the topics and whatever you want to ask.
Fantastic. Thank you for that. So let's see. View options. Okay. So I guess now we could just go through the questions. Eric, yes, we've seen your question. So we'll just answer them in the order in which we receive them. The first one was just, it's maybe a bit too technical, I think, but just generally speaking. So in other jurisdictions such as Europe, if there are cross-border tax arrangements which may help to optimize the taxpayer's position, the accountant or tax advisor or tax lawyer is required to disclose those arrangements to the relevant authorities. Could you comment on the new rules that have been phased into Mexico to that effect as well, please?
Yes, of course. Each year we have a list. It's a very huge list of those transactions which has to be disclosed. And this year, the main important thing is that on the tax return, it has to be disclosed. So for individuals who have to file their annual return on April, or corporations on March, we have to disclose that. And you have to put that what are you doing, what kind of transaction is the one that should be disclosed. Also because we have to be very transparent, and if those transactions are let's say observed by the authority and you didn't disclose on your tax return, then there are higher penalties. So it's very safe to look at this. There's a lot of them it's very convenient to have this. It's called Resolución Miscelánea. If anyone wants the listing, I could send you, of course.
Okay, fantastic. Thanks for that. Moving on to the next question. Uh, hello, I'll be attending, blah, blah, blah. I have one major question I was hoping could be answered. If I obtain temporary residency in Mexico while being based in the US and remotely work for a US based employer, but plan to spend more than 180 days in Mexico per year, would I incur a tax liability in Mexico under Mexican law?
Okay, in this
Mhm,
case, we have to see many situations of the
mhm,
life of this person, but mainly what rules here is what is the source of income.
mhm,
If this person is not having an employer in Mexico, I see that is working for a US-based employer,
mhm,
then that person could be here with a migration permit without having to pay taxes in Mexico.
mhm,
Even though that person would have double residency without becoming Mexican tax resident. Also, they can have now bank accounts in Mexico as
mhm,
foreigners. So that person, with this information, I think that could
mhm,
be remaining as a U.S. tax resident 100%
mhm.
without risk of being taxed in Mexico.
Right, but I'm just wondering, what about the
Mhm.
180 days? So that days test. If they cross 183, if they cross 6 months, does that
Yes.
change their position?
Well, the position is applicable for those who are carrying out professional services or business
Mm,
profits. So, in terms of that, if they are not earning income
hmm.
from a Mexican source,
Okay, okay.
they are not they don't have the obligation to become Mexican tax resident. They will be as a U.S. tax resident, and
Hmm,
if they have some, let's say, some professional services, little
hmm,
professional extra services,
hmm,
uh, they could be considered taxable in Mexico, but as a U.S. resident. Then the
mm,
payer or the client should be withholding 25%,
hmm.
not
Right.
paying that person then a return and the
Yeah.
whole income worldwide.
So in other words, they split their income between, the Mexico source income, which is going to be taxable, and then the rest of their income that arises outside of Mexico won't be taxable. Is that fair?
In terms of withholding, yes,
Yeah. Okay.
because the withholding would be only for the income coming from
Hmm,
Mexican source, but this
hmm,
person should consider the whole income from Mexico and the US
hmm,
in the annual return in the US,
hmm.
and maybe having the right to credit the Mexican tax payment,
Okay.
the
Gotcha.
withholding. Mhm.
Thanks for that. Eric, yeah, I see your hand, but we just need to approach the questions in the order in which we receive them. So, uh, thanks for that. Uh, right. Okay. Moving down, number 3. This is a really popular topic. We always get this, right? This one is from
Yes,
Colin. I'm hoping that during the webinar we can comment on the tax treatment of gains and losses made trading crypto from a Mexico tax perspective. Crypto.
residence.
Yeah.
Crypto
Yeah.
is very very famous topic
Hmm,
now. Well,
hmm,
in this situation, we don't have special rules on cryptocurrency here in Mexico, but in general, we have a worldwide tax regime.
hmm,
So a Mexican tax resident may have money in any part of the world, and they
hmm,
have to pay the, let's say, income tax for the interest
hmm,
earned, whatever it be, or capital gains
Mhm.
also can shift the losses against the gains.
Mhm.
Uh, we don't have in between a bank or a financial institution, but
Mhm.
we have in the tax returns of everyone one
Mhm.
section which is for financial institutions and other one which is not for financial institutions, and you don't have to disclose where the money is, if it's
Mhm.
currency or not. You
Mhm.
put in general what is the amount that you should pay. And also, only when the Mexican IRS asks you
Mhm.
for the breakup of these amounts you are reporting, then
Mhm.
they should be transparent and show where's coming those gains, those incomes.
Okay, gotcha. In many of the jurisdictions like US, UK, Australia, whatever, there is a difference between a crypto investor from a tax perspective. So a
Yes.
crypto investor where they pay taxes at a capital gains rate, and a crypto trader where they pay like a business or like almost like a corporate tax rate. Is there that distinction between a trader and a crypto trader and a crypto investor in Mexico tax rules?
No, at this
Mhm.
point, as we don't have special rules for cryptocurrency,
Yeah.
there's not any difference in the tax treatment. Um, Only, of course, if you're a trader and
Hmm.
you are having, let's say, commissions for your services,
Hmm.
then, well, that's not uh, as capital gain. Then
Hmm.
it's a professional service, for instance.
Right.
But they, as cryptocurrency, we have no specific rules at this
Hmm.
point.
Right. So there's no distinction for trading versus investors. So everyone is treated like an investor then, capital
Yes,
gains
of
and
course.
losses. Okay. Okay, Colin, hope that answered your question. Moving on. Uh, this is a long one from Vic again. Okay, I wanted to submit. I'm a professional actuary currently employed by a US subsidiary of a large multinational based in Europe. Okay. I'm 100% remote. My wife and kids are based in Texas, so they're on the US side of the border. We're in the process of obtaining temporary residence from Mexico, and I plan to spend. He's going to keep his days, so he's aware of the days count. He's going to spend less than 180 days in Mexico per year.
Yes.
But his family may stay longer in Mexico, so his family may trigger the days test, but not him. He's going to be counting his days. So his question is this: given his circumstances, so 100% remote, US based employer, everything in the US, and he's going to keep his days under 180 days. Is there any danger of him incurring a tax liability in Mexico? And more importantly, for his employer, I guess because he's a relatively senior position, is there any risk of triggering tax or I guess permanent establishment for his employer as well?
Well, under
Mhm.
the circumstances, I see that his personal life is in the US.
Mhm.
Family is
Mhm.
home. Also, the income source is not
Mhm.
Mexican; it's outside.
Mhm.
So he will have a temporary residence in Mexico.
Mhm.
It is very important to see what is will be doing this person in Mexico.
Mhm.
Maybe it's a work assignment,
Mhm.
and if it's working for a subsidiary,
Mhm.
or I don't know, that's the part that is not very clear
Claire.
here.
Mhm. Mhm.
But if we think that the employer is in Europe, is outside Mexico, is not having income, maybe he will have a transfer of his salary in a bank account in Mexico that
Mhm.
is opened as a foreign resident. I think that he's not in problems there.
Mhm.
So only their activities, if let's say if the tax authorities ask him if you were working in Mexico,
Mm-hmm.
maybe your employer is not Mexican, but you were having here an economic activity,
Mm-hmm.
and that has a value in market,
Yeah.
and that's the fine point that we have to look with care.
Mm-hmm.
That's the only
Mm-hmm.
one. For the other situations, it will be safe.
Right. So it appears relatively straightforward, but still, we're thinking that professional advice is needed here. So,
Yes.
whoever you want to, this person would need to sit with an advisor and probably drill down and get a bit more detail on the table before a decision could be made either way. Okay.
Yeah, that's correct.
Okay. Fantastic. Moving on to number 5. Hi, what would the tax scheme be for an expat who is Mexican? So I guess this person has dual nationality. So he's both Mexico and something and some another nationality. And he is, after an extended period abroad, he is now again spending time in Mexico. Uh, any comments?
We are on, let's
Number
say,
number 5.
number, let me see here, number 5.
Yeah.
Any withholding obligations on my behalf? Is
No,
that
number
one?
5. No.
Ah,
What
okay.
tax scheme? Yeah. Okay.
This is for expat with also Mexican. Okay, nationality is one of the
Mm-hmm.
situations that could become someone as a Mexican resident, not the only one. So
Mm-hmm.
just for that element,
Mm-hmm.
is not a Mexican tax resident. He's telling here that he's an expat, but I don't know if he's
Yeah.
expat in Mexico or in another country.
So that's it was a bit confusing for me. So what I'm guessing, maybe
Mhm.
he or she has spent some time abroad and they return to Mexico, but so they feel as if they would they self-identify as an expat. So they're wondering whether that having that Mexican nationality would impact on their tax status. But as you pointed out, it's one of the considerations, but it's not the only
Yes,
consideration.
yeah,
So I guess in order for you to give a determination, you'd need the complete picture.
yes, that's right.
Yeah.
Yeah.
Hmm.
Mhm.
Okay. Great. So whoever asked that, please feel free to reach out to Carlos directly, and a lot more information is required before a determination can be rendered. Moving on to number 6. Hi, this is from Lenin. I'm working with two companies. The first one is a Mexican company. I've been working as an employee for several years. Okay, so Mexican source income, Mexican
Mexican.
employer.
Mhm.
Okay. The last year, I had the opportunity to start working with an American company as an employee under work visa, and I got my case he has a social security number. Uh, but both are remote work, so he's doing remote work in Mexico for both a Mexican employer and a US employer. So he's lucky he has two
Yeah.
jobs. So he did his tax return in the US, but his question is uh about his Mexico taxes. How does he declare his Mexico taxes?
Mexico
Uh
tax. Well,
yeah.
this is very interesting. Very interesting
Yeah.
question because the source of income is in two countries, two different countries,
Yeah.
and their tax authorities would claim
Mm-hmm.
to declare both.
Yeah.
So we
Exactly.
are under a double taxation situation, but there are a
Yeah.
lot of things in between to consider.
Mm-hmm.
Maybe he can choose, but
Mm-hmm.
if he's living in Mexico, we have to see where is his family, where is
Mm-hmm.
living,
Mm-hmm.
uh, just to avoid, let's say, that he's paying his taxes in the U.S. But we will be very clear just to avoid that
Mm-hmm.
the Mexican authorities ask to pay taxes also in Mexico.
Mm-hmm.
This is a double taxation uh, situation that
Mhm.
needs to be addressed with care. With care,
Mhm.
uh,
Mhm.
it's very easy because if you pay taxes only in one state, you can credit the tax paid
Exactly.
in that
Yeah.
in
Yeah.
the other country.
Mhm.
So you have to have the tax residence certification
Mhm.
in one of them.
Mhm.
Uh, we have to look at that uh, at this point,
Mhm.
not as a problem, but as a
Yeah.
challenge to know what's the better situation.
Right. So it's not insurmountable, but it is a challenge. And
Mm-hmm.
at Carlos, we like challenges. So what we say what we're saying is that don't worry, this person might be in panic mode. Don't worry, you're not going to be double taxed, right? Because
Yes.
first of all, both nations, both jurisdictions recognize foreign tax credits. Plus, there's a treaty to rely on. So once you have a tax team that understands both sides, you should be free of any double taxation. But more information is required. So there's also, that whole center of vital interests and where's your family, habitual abode, stuff like that. So again, don't panic, don't worry, no double tax, but you still should sit with a professional and get the right advice. So, okay,
Yes. Yes, in many
fantastic.
situations we work
Yeah,
together,
yeah,
let's say from the U.S.
hmm
and the Mexican tax, and
yeah,
we see both
hmm
sides
hmm
to be in order in both countries.
absolutely. Okay, Eric, we've got to you now. Okay, so if someone makes more than 190,000 US per year, then they would not qualify for this new trust tax regime? Question?
No, they will be paying on the previous tax regime, and at that point the tax rate it will be like 30 or no, I think that 32% more or
hmm
less is tax rate.
hmm
Uh, this is and also it's a very important situation here. But if someone uh, has the estimation that they would earn less than $190,000 a year, and at the end of the year earns, let's say, $1 extra,
yeah,
then they are in risk to be changed to the previous regime.
previous. Yeah, they have to pay the
So
difference.
yes, this is a
Yeah.
very important situation to be looking each month, because
hmm
if you go up this amount, you could be out, and if when you are out of this regime, you cannot be once again in that
Mm.
in many years.
So it's key really to have a strong sense as to what your annual income would be at the beginning.
Yes,
To make that estimation, to make that budget calculation, to make it as accurate as possible, to prevent any. Because I'm assuming that if you go for trust and then you push back into the previous regime, you're not going to
yeah.
pay not just pay the difference, but you have to pay any sort of interest or penalty?
That's not clear at this point.
Okay.
Anybody has that situation, but
Yeah.
they are they're telling that you should pay the difference.
Right. Just the difference.
Penalties
Okay.
are not
hmm
clear to be. But
hmm
I hope not, because that doesn't is in your hands.
hmm
So if we have an independent contractor or a professional, they don't have the same amount of income each year.
hmm
It is variable, so it's not your fault.
Yeah, exactly.
Mhm.
Yeah.
Yeah.
For many freelancers, remote workers, digital nomad, gig workers, they don't know. It
No.
could be higher, could be lower. So
Yes.
it is a challenge to figure it out.
Yes. Maybe at
Okay.
the end of the year,
Yeah.
that person may change the
hmm
income to the other year, or
hmm
or whatever, or
yeah.
maybe to open a, a company.
Right. hmm
There's a lot of
hmm
situations that could be handled.
Hmm.
but we have to be very careful month
Hmm.
by month to
Hmm.
monitor this income limit.
Okay. All right, Eric. Hope that answers your question. So moving on. Okay, more crypto. So someone is asking. Well, we kind of touched on this already. So day traders. So this person is doing tens of thousands of transactions a year,
Yeah.
and he just wants to make it absolutely clear that that is going to be treated as capital gains as opposed to some sort of trading or business income. Is 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 that fair?
Gains,
That is going to be capital gains with crypto,
yeah,
even though
it's,
it's high volume, high frequency.
yeah, gains and losses. It's a day trade gains and losses. Doing tens of
Hmm.
thousands of transactions a year treated as an
Hmm.
income or capital gains in Mexico.
Yes.
Okay, so in this case,
Hmm.
I understand that is having gains and losses,
Correct.
a lot of them. What
Correct.
is very
Yeah.
complicated here is to have from each one of Binance or whatever other
Yeah.
platforms to
Yeah.
have a report of
Yes.
your transactions.
Exactly.
And some of them they issue
Hmm.
a null resume, but
Yes.
it's not very clear.
Hmm. Hmm.
So first of all, we have to be very careful to have a personal control of your gains,
Hmm.
your losses,
Hmm.
because sometimes they could be you could be offsetting
Hmm.
losses against gains in one day or in 1 second,
Hmm. Hmm.
and we don't have rules for that. So
Right.
maybe it's determined transaction by transaction.
Wow.
It's
That
a
that's
lot
gonna
of
be
work.
that's gonna be really difficult because we have clients that have millions of transactions, and some
Yes.
do like like high six figures, as in hundreds of thousands of transactions per day if they're algo traders. So if they're algo crypto traders, if they're algo trading, right?
Yeah.
So in other jurisdictions, we'd use the trading rules. So we'll mark to market. So they don't need to track each transaction, each buy and sell.
Yeah.
We could, you we just mark to market whatever the inventory at the end of the year, beginning of the year, and we can report that way. But are we saying that Mexico doesn't allow that? And even though it could be, in this case, tens of thousands or more, you would still
Yeah.
need to track and it'd still be
Well,
treated as investments.
as we're not updated
Okay,
with those regulations
sure.
at this
Yeah.
point with the law which is
Mhm.
enforced,
Right.
I can see that there is
Mhm.
there's a need to
Mhm.
have some information
Okay. Right.
because our tax authorities, let's say about currency gains or losses, they
Hmm.
do not
Hmm.
allow to offset one against the other. So
Oh,
if they have the same criteria, then
yeah.
we will be facing problems in the future unless we have
Oh,
those rules you are talking about in the
right.
near future
Yeah.
here. I hope we have them
Yeah.
soon.
Okay. So I guess as an addendum to that, Colin is also asking, okay, so does this qualify, does this kind of activity, crypto trading, does that qualify under the new trust law?
Do the crypto capital gains qualify for the trust law?
Yeah.
Trust law. Well, here is
Hmm.
this
Hmm.
a legal uh,
Okay.
situation because
Hmm.
Mexican law
Hmm.
consider trust
Hmm.
on to be formed under our proper laws. If
Mm.
let's say if
Hmm.
you go with a public notary and set up a trust, is a
Yeah.
Mexican trust.
Hmm.
Okay, so if we consider to have crypto transactions
Hmm.
outside Mexico, because
Hmm.
all
Yeah.
the transactions are
Hmm.
outside,
Hmm.
maybe they will not
Hmm. So
be.
so I think he's referring to, the simplified tax regime. So if you earn less than $190,000,
Ah, yeah, yeah. Okay,
yeah.
okay,
So
I understand.
so would
Qualified.
crypto qualify for that reduced, that simplified reduced tax treatment?
Well, in this case, as the tax
Hmm.
regime
Hmm.
is applicable for
Hmm.
personal services, professional services is not professional services unless you
Ah,
take that as a commission
right. Okay.
for trading. But if they're
Mm-hmm.
capital gains as that,
Hmm.
we may have the uh, as profit gains,
Hmm.
not in the Mexican law,
Hmm.
but in the treaty. Maybe we can
Okay, look at the
use the
treaty.
treaty
Okay,
to
yeah,
recall them as
yeah.
in that
Mm. Okay. So
chapter.
just to summarize for Colin, so
Yeah.
with crypto, because the new trust law
Yeah.
is applicable to professional services only, it's
And
unlikely that
business profits. And
and
business
business
profits.
profits, okay,
Yeah.
and business profit, it seems unlikely that crypto trading may qualify at this point in time. But there may be other tax planning opportunities to consider to
Yes.
optimize the tax position on this crypto stuff. So uh, don't lose hope. You probably
Yes.
need to sit with Colin. You probably need to sit with Carlos and probably take a closer look at this to see what can be done. Okay,
Yes, of course.
gotcha. All right. So okay, Eric says thanks. You're welcome. Okay, last question because we're at the top of the hour now from Katie. I'm single, living in Mexico as a temporary resident. I work for a company here in Mexico, and I also work for an online company based in the US. So someone
Yeah.
else who has two sources of income, either side of the
Yes.
border. Would I declare taxes in both countries? Carlos.
Okay. In this
Mhm.
case, as this person is working as an employee in a Mexican company,
Yep.
then the Mexican company is withholding from the
Hmm.
salary each
Yep.
month and is declaring and paying that for the Mexican IRS. So I think that this person is uh, as living in Mexico and having other personal situations
Hmm.
uh, is already Mexican tax resident.
Yep.
Then in the US, I think that that person has not familiar or
Hmm.
other things. We would like to know which weights more in terms of personal links.
Yeah. Yeah.
But in this case, I think that if he remains as Mexican tax resident and declares as is the source of income is coming in Mexico, maybe
Hmm.
if 90% of that is
Hmm.
Mexican source, could be declaring in Mexico and crediting in the US
Right.
the tax
So
paid.
so it's similar to the previous situation, the previous
Yeah,
questioner,
yeah,
in that a person is, as well, Katie has just clarified, she's tax resident in both countries. So, and she's earning income from both. So
yeah,
again, don't worry, don't panic. You're not going to be double taxed normally.
yes,
You're not going to be double taxed because we have tax credits. Foreign tax credits are recognized in both jurisdictions, and we also have a treaty. So we can invoke treaty if necessary. So more information is required because there may be an opportunity to invoke tiebreaker. We don't know, depending on your center vital interests and so on, habitual abode, permanent residence, etc. So there may be planning opportunities here. More details are needed, so you need to sit with an advisor. But the good news is that you're not going to be double taxed. So that's a good news story. All right,
yeah,
so thank you very much. We've come to the end of yet another fun session. We enjoyed your questions. And again, this is all being recorded and it'll be available wherever you get your favorite podcasts. It'll be on YouTube and everywhere else. So again, we do this every week. HTJ.tax to see what live streams we're doing next week and in the following weeks as well. So thanks for your time. Thank you, Carlos, for sharing your expertise and your tax wisdom. And thank you guys for joining. And we see you again next time. Have a good morning, evening, night, depending on where you are. Bye bye.
It was a pleasure. Thank you, everyone. Have a good night.
Bye bye.